Hello, folks, and welcome to a quick pre-weekly analysis of the current week. After discussing price action with multiple, you know, students, it's time for me to do my own and for you to, quote unquote, inspire from it and to understand the logic from it. And for you to do so, you would need to understand my point of view in the first place. And for you to do that, actually, you need to forget about every single pattern you count on and to actually trade price action in realms of highs and lows, and that's it, right? Because if you see the bigger picture here, and I don't need any other time frame than the daily. If you see a bigger picture than this, then it's gonna look like a range. If you see a lesser picture than this, you're gonna see it as a trend, which means as of now, the ideal thing to watch is this, right? So it's fair enough to say that if I do draw this market like this, it's also fair to draw it like this, right? Number one, and then number two, false breakdown, and also number three, SMT, right? It's also fair to do both. So here, on this instance, right? On this instance here, this exact example, I'm gonna show you how to read marketplace correctly when both sides are potentially given, and what are you doing in the exact next candle. So again, the more I zoom out, the more likelihood for you to see a range, the less likelihood for you to predict a candle, and so on. But I'm only interested on the previous candle and forecasting the current or the next candle that's gonna print. So I'm not gonna do any extraordinary stuff. I'm not gonna do something I never thought. I'm only gonna follow what I mentioned to every single one of you, which means follow the order flow rules and follow the highs and lows rules and follow the PDRA rules and then eventually follow the candle closures and see where that takes us. If we use it as a pattern and that takes us to a you know, correct bias, then there's no need to apply logic. But if we use it as a pattern and then it takes us to a wrong way, then you obviously will know that implementing time and implementing profiles and implementing price delivery and implementing many things is gonna help out increase that win rate, because even if you pattern trade, this is still gonna work out. Now, if I tell you that, and from this perspective only, then what you see here live is a range in premium, which means a bigger picture is a range above a range. And there is a set rule that says a range above a range, right, is a candidate of what? We already went through this before. Ranges above ranges, correct? Now, the range above a range, the first side, the first breakdown slash breakout is gonna clear up the thoughts about the larger or bigger picture range. It's usually a candidate of rejection, alright? Or excuse me, it's usually a candidate of a breakout and then a second stage. But this idea here is the first side that gets broken. I don't care about rejections. If you put a scale of importance, then on the scale, the number one is gonna be breakout, then the number 10 is gonna be false breakouts, or same thing with breakdowns. It's irrelevant if we reject a high. What's relevant if we break a low? It's irrelevant if we reject a low. What's relevant is to break a high. What proves a concept is breakout. What disallows a concept is false breakouts. Vice versa, obviously. What forms PD rays? Breakouts. What gets us out of ranges? Breakouts. What forms dealing ranges? Breakouts. So the idea is you're observing the breakouts more than anything else. So if you ever trading a range right now, that's what I'm saying. It's preferably, or it needs to be traded from a side to another side, and not the opposite way. So the range itself here means a potential breakout out of this range, which is the case. But rejection of a range in premium is a candidate of retracement, reversal, a larger range, essentially short-term lower prices for either reversal, then long-term lower prices, or and short-term lower prices to long-term higher prices. That's what a range in premium in a bullish market after a breakout means. And that is exactly what we're trying to trade for, I would say, in the past 30 weeks or so, or 20 weeks or so. And the idea here, my friends, is the timing of a range was near the close and near the open of the previous candle and the new candle. Right? Now, we forget about the pattern when using the logic. The timing of the raid is after crossing the opening price with a specific seasonal tendency that says most of the tops and the bottoms of yearly candle, even short-term ones until bullish again, forms near the open or in Q1. And that's a fixed value that happened before and will happen again. Right? Except that short-term bearish to long-term bullish. Right? Which means you're not thinking of long-term swings, you're thinking about SMRs, smart money reversals, occur mainly on Q1. So if we're bearish, then Q1 mostly gonna form a reversal, either for long-term bullish or for short-term bearish, for example. So this is the idea next, is a rejection of a high, of a weekly high, near the yearly open, above range high into a premium level, and then a small range, then a large dip, correct? And then an OTE, and potentially lower prices into what? Range low. Now, what prevented this idea is the SMT alongside with a breakout. Not the SMT alone, the SMT alongside with a breakout. Alright, so this with a rejection of the low followed by the breakout. If the SMT formed a range here, then that's no-brainer of selling somewhere here. Right, but SMT, first breakout shift, OTE, second breakout. Just by watching the candle's shape, you can tell what it looks like on the lower time frame. Down close candles are ranges, bullish order flow inside, on a daily at least. Right, when it was the time for a second expansion leg to confirm the top, or this 3 drive was to SMT a bottom slash take out a bottom, then a dip occurred and a low, and then an SMT and another breakdown. So if we're clearly breaking down this market on a weekly time frame, there is this set rule of reaching a specific low, rejecting, and then revisiting another high. Reaching a specific high, SMTing, then reaching a specific low. And then it's like a loop or lap, right? That repeats. So every single time something happens, there is a reaction. SMT, total soup, PD ray, whatever, which automatically gives us an idea of a potential weekly range, which means that if you're ever trading a daily chart, it's trending. And that's the conclusion I need, which means I'm dropping the weekly time frame, I'm dropping the weekly logic, and I'm dropping the weekly, you know, closure. And let me explain why. The idea of mine that I'm saying right now is safe more than right. Why is it safe more than right? If you remember, before at the time the video started, I had this high marked out, and I had this high marked out, and I had this this high marked out, right? On a daily time frame, all these are important swing points that either broke down of an old low or are presenting a major liquidity pool that must be taken, right? Or that was taken. So the idea why this is safer is because you can frame that and you can also frame that, right? You could frame this false breakdown, then breakout. Which means if you're moving on a 50-50 mark because of the potential range, and even worse, if you're wrong about lower prices or higher prices, lower prices, and also there is a potential larger range forming on a weekly, then it is as of no use. And if you're using it, it's a recipe for a lesser likelihood for a trade to work out. So you're dropping the weekly entirely due to its potential profile being bullish, potential profile being bearish, and potential on the lower time frame, and potential profile of a weekly time frame being a range. Right? Reject lows, reject highs, then you're dropping, and now you're trying to trade a lesser time frame, and then try to predict whether it's a range, or trying to predict whether it's going to move to the downside or to the upside. So if the weekly is ranging, automatically on a daily time frame, you're not going to find range. You're going to find multiple trends. So if you're ever finding multiple trends, the idea is to trade into failure swings and failure swings only, except if you can confirm somehow that the weekly is not trending. Just like Monday opens and does this, or Monday opens and does this, right? And on a weekly suddenly starts to break out or start to break down, then you can hold. But if it's a slow, steady trend, then preferably exit at any failure swing that was not recently formed, right? For instance, you exit at any failure swing really, and not the ultimate goal. So, or here. So, with that being said, the current price action, and what does it say, or what does it say exactly? So there was a SMT that caused the breakdown, and the idea is this rally before this entire thing broke out of a range high, formed bullish PD rays and inefficiencies on the way up, and then formed liquidity pools right above them. So a potential, idea. And then at the time we tease the key level, then reach it, there was a breakdown, correct? Formed by an old low, formed by an old range, and formed inside an existing higher time frame key levels on the left. So, what exactly are you planning to do based on the previous weekly closure? Now, it was a Friday, yes, or the candle that rejected the top was a Friday. But if you're ever looking for a top to form, it should always form above this top into this key level. So, for example, Austin, if you're watching this and you wanted to take shorts, then selling this, all right, selling this, let's say hypothetically, you're selling it just like you planned before the week opens with your, let's say, a way safer stop loss, right, somewhere above here, then that is a trade idea. Because let's say this, there's no potent, if you're right, again, you don't need to be, uh, you don't need to be right, you need to be safe. If there is a ever, if you're ever right about a trade idea, and if you're ever right about a bias, and if you're ever right about this entire thing here, then the idea is a high must be rejected and a key level must be rejected, right? A high must be rejected and a key level must be rejected. So once you meet both a breaker FVG and a liquidity pool being taken, and especially when you don't care about how the lower time frame is looking, you're simply executing the higher time frame, then selling this itself with a decent stop size with the decent stop loss uh, will represent a large trade idea. And then the only thing left is to know how to manage the trade. And for example, at the time we reach this low, you immediately look for a break even. So once you do this, all right, once you do this and the low is met, the second it's met, you're breaking even. The idea is that you're not sitting into a larger range. Number one, you're not sitting into a rejecting lows and rejecting highs. Why? Because the most recent candidate was rejecting a low. And rejecting lows means reaching highs. Now, is it breakout above highs? We don't know unless there's context. So, if it starts rejecting both lows and highs, then you drop the daily time frame and you switch to a 4-hour time frame and so on. That's though this will be a topic for later. But essentially right now. But if you were ever thinking about let's say about buying, right? Then this SMT should never get ran through, which means based on, well, most of you, or some of you framed short, some of you framed longs, which is completely okay. But let's say if you do this, you bought the SMT or you bought the low, which is, by the way, this is the exact same thing as selling here. All right, with a stop loss here and looking for this, for example. You're only given one entry. If you're right, you're right. If you're wrong, you're wrong. Now, what do I exactly think about the current price action and what would potentially happen? Now, let me hint you something is that EU is not the entire picture. Dixie is. Dixie is the bigger picture for EU. And if you want to frame anything EU, you need to go through Dixie and convince yourself that Dixie matches what you framed on EU. And Dixie's profile right now is way more different than EU. So, what is a correct, safe trade idea? It is to look for the top and to look for the gap and to sell both, regardless. So, some of you will say it was taken on Friday and the profile was off, and this was a protraction of a weekly candle, but the entire profile from Monday to Friday was a range. So the idea is if the weekly candle is ranging, then most of the bottoms and tops are formed on Thursday, Friday. Bottom was formed on Thursday, top was formed on Friday. By the exact same manner, flipped. SMT, total soup. If there was a classic profile towards the top, after the classic profile Friday met the top and I'm protracted, then maybe. Now let me tell you what will happen. By the time Monday opens, if the delivery is not gonna switch to a range on the daily time frame as well, by the time Monday opens, if you're lucky enough to get an entry, there will be a fast, quick move, and the quick move is not gonna let anyone participate because SMT's total soups equals expansions, and your execution and your framed chart is the daily. So the explosion is going to occur while you wait for profiles. So this is one of the scenarios where you look for SMTs and you look to sell highs immediately, and you execute the higher time frame, right? And at the lower time frame, you would need to look for specific liquidity pools to be taken. And if you're ever right about higher prices, you're lucky enough to get to enter. But if you're framing lower prices, then selling the top was the way. right? But um, getting out of the current ranges is what I want to see. And if it doesn't, and it's a larger range, then sadly, you're not, and I'm not gonna be in a trade, right? So we're gonna see what will happen eventually. But with that being said, I'm gonna cap off the lecture now. Thank you guys for both coming and listening in. And I will share most likely an execution of mine with its full breakdown by Tuesday or Wednesday max, at least before it hits either side. But before that, you guys stay safe, and I'll see you soon. Peace.